Yeah.
So, how long have you been in the mortgage business now, man?
So I got into it at the end of 2020, right at the end of COVID, I guess, or when everything started opening back up. It's been about 4 years now, just about.
Okay, nice. So right before COVID, I heard houses were flying during COVID.
Yeah, everyone, you know what, it was a different game back then. Everybody was qualifying. It wasn't as hard to get somebody in a house back then as it is now.
Right now, it's a lot more competitive, and the rates are higher. So now it's a whole different ball game. What inspired you to pursue this job?
Honestly, just being able to help someone get into a house and make them realize that it's a lot easier than they think the process is. Honestly, everyone gets, too worried about, getting certain documents together, and a lot of it's basic information that they already have access to, pretty freely. So, just kind of simplifying the process for everybody.
Right. It can be a very, very complicated process for sure. Uh, so walk us through a normal day in your shoes. What time do you wake up? Coffee or tea? Walk us through a normal day.
So average day, I would say, I mean, I get up and I go running in the mornings.
Oh wow.
I'm actually training for a half marathon right now in December. So I
Wow.
wake up, I usually do 2 to 4 miles. I'll grab coffee, I'll shower, I'll go to the office by like 9:30. Beginning of the day is really just focusing on what files that I have that are most important right now. Maybe we're working on getting it clear to close, or maybe we're working on getting the commitment out or clearing conditions. That's usually the first part of my morning. And then after that, I'm usually doing outreach to, potential clients that I have or potential buyers that are actually looking in the areas, touch base with them and see how open houses were over the weekend and, kind of just see where we're at with that. Maybe we want to put in some offers or following up on the offers that we did submit over the weekend, calling the listing agents to see where we kind of fall within the range. Hopefully we get a couple good answers and we start the week strong.
Right. So what time do you end the day? In the evening, I assume?
I would say a normal day, I'm probably out of the office at around 6.
Okay. So you obviously you make your own hours, correct?
More or less, yeah. But our team we have in the office, we're all pretty much there. Usually 9:30 to about 6. Sometimes some of us stay till like 7:30, depending on what we need to get done. We
Right.
we do like to typically set up the night, that night for the next, excuse me, for the next day, and kind of streamline the next morning and make sure everything's up to date before we head out. So.
And are you in the office, what, 5 days a week or?
I would say 4 or 5 days a week, yeah. Like today, the office is closed, so we're doing some things from home, but we're still trying to get a couple clear to close today while we're working. So never really stops. You know how it goes.
Right. But you go to the office on your own. Like there's no boss that tells you to come in. You choose to go in. Is that correct?
No, so I'm on a team. So my branch manager is Dan DiBiase. So we work under him. But you know, it's better for an office culture just because we like to get a lot of things done together.
Uh-huh.
There's certain questions that I have, maybe, hey Dan, is there a certain different way to look at this? Maybe it makes more sense if you could just explain it to me real quick. So I personally like the office culture just because it's a little bit more interactive and typically get a lot more things done.
Right. Yeah. Because at home you have a bunch of distractions and YouTube and kids and all that. Nick, tell us about your very first year. The first year is always the hardest for most people. Tell us about your first year.
So first year for me was a little different just because excuse me. Like I said,
Apologies.
it was a COVID year, so rates were mid to low twos at the time. Everybody qualified. Um, so it was more so, call them up, see what they're looking for, get them in the house. It was for me, it was a lot of learning, learning the different programs, learning the ins and outs of FHA conventional guidelines, and trying to really facilitate, what fits the client better. Are they looking to save money out of pocket? Are they, do they want a seller's concession? Do they have someone to give them a gift for the funds? Certain things like that. So a lot of that for me was learning that kind of structure for those programs and really just delegating the different types of options that people had. Um, Getting people to qualify, like I said, it was very simple.
Mhm.
Since the rates were so low, a lot of people qualified for what they were looking for at the time, but the competition was fierce. You're looking at a house in, let's just say, Seaford, for instance, and it was listed for 599. Some cases it was going for 699 or 725 in some cases. It was insane. The market was a whole different animal. People were coming in 150,000 over ask in cash and
Right.
closing with no contingencies. So Getting accepted offers at that time was definitely a lot more challenging than it is now. Now since we're in the, quote unquote the downturn of the season going into the fall, winter, keeping your buyers out there now is a better idea just because there's a lot less competition because people think that this is a time to slow down in the market and not really get anything done.
So it sounds like there are ways in which it was easier back then and ways in which it was harder back then, which is very interesting. Because the rates were lower, so of course that helps. But it sounds to me like you got in a good time because like I said, houses were flying during COVID, so it sounds like you got in at a pretty good time. Nick, what is your favorite thing about being a loan officer?
Honestly, it's helping families realize that they can get into a house a lot sooner than they think. It doesn't require the commonplace of the 20% down, the 10% down. You
Uh,
know, I just had a recent closing with the client. They did 3.5% down FHA. We
wow.
got them, the house appraised a little bit higher. We got them a seller's concession and we got them in the house for, just over 5% out of pocket. So it's a lot, like I said, it's a lot simpler than most people think. It doesn't have to be as hectic as it seems online or maybe what their parents have told them buying a house 35, 40 years ago. So I think it's streamlined a lot more since earlier days.
So you mentioned FHA. I know a lot of people are very interested in this topic. How does one qualify for an FHA?
So standard FHA guidelines, 580 credit score minimum. Just so everyone knows, on the bank side, we look at the three scores and we take the middle score. So if you have a 620 credit score, a 600 credit score, and a 580, we will be using the 600 credit score just as, the risk tolerance for the bank. Um, so 580 credit score is the minimum, 2 years of consistent work history with no gaps in your job. So if you left a job and you had, 4 to 6 weeks off, that may be an issue qualifying just because 6 weeks they're going to ask of, what happened, what exactly was going on during that time.
Right.
2 months bank statements and 2 years tax returns. So those are the basic qualifying documents for FHA. The minimum down payment requirements 3.5% down, and with 3.5% down on FHA, you're eligible for up to a 6% seller's concession. And in most cases, that can cover almost, I mean, if not all, but most of the closing costs in a transaction, which is significant for somebody who maybe, tied for funds or maybe not have the option to give somebody a gift.
So it sounds like it's not really too hard to be qualified for an FHA because 580 credit score, most people have. So it sounds like it's relatively easy to qualify, no?
It's one of the simpler programs, yeah. I mean, there are some caveats to that. So there is something called upfront mortgage insurance premium. So that is something that gets rolled into the loan. That is something that protects the bank if they were in lieu of default or something along those lines. Um, that is something else that you do need to consider when you're getting FHA. That is 1.75% of your loan amount that gets
Oh,
rolled into the loan itself. So, a lot of people do forget, hey, I'm buying a $500,000 house. What's this extra $8,000? That's the upfront mortgage insurance premium that not everybody mentions. So,
right.
it catches a couple people off guard. But the beautiful thing about FHA is that you're able to finance 1 to 4 units and use the supplemental units that you're not living in as additional income to qualify. So if you're buying a duplex, you can use that second unit to help you qualify for that mortgage.
Very interesting. And you can only apply for the FHA once, or can you get it multiple times?
So you can get FHA multiple times. There are certain little things with that. You do need to satisfy the original FHA.
Right.
You technically need to become a first-time home buyer again, which is anything over 3 years. If you sold a
Interesting.
house in 2021, and let's just say April, right around now is where you could be considered another first-time home buyer. So
Interesting.
typically it's 3 years of not owning property is what they deem that as being a first-time home buyer.
3 years of not owning property.
Correct. So if you were a homeowner, let's just say, and you sold during COVID, 2020, 3 years later, after being deemed not a homeowner or selling that said property, technically you're considered a first-time home buyer again in the eyes of FHA or Fannie.
Very interesting. Very interesting. Okay. I didn't know that. Thanks for that. What is your least favorite thing about being a loan officer?
Hmm. That's a tough question. I would probably say delivering bad news.
Hmm.
Uh, let's just say, we get the title report back and the taxes come up, a few $1,000s higher, and we were, let's just say the debt to income ratios for the client were a little tight. and they're not accounting for that extra $300 or $400 a month, that could make or break your deal.
Right.
So depending on that, it's really just figuring out the right way to talk to the clients and deliver the bad news. Hey guys, look, hey, I know your budget was X. Hey, this came in a little bit higher than what we were expecting. Are you guys still okay with that? And then, it's really just dealing with emotions of the clients and just trying to find common ground after, some surprises may jump up or come up like that. So that's probably one of the more difficult parts. Other than that is telling the clients what they want to hear, information wise, and then them taking it and actually misinterpreting what you said and bringing it to somebody else. Always talk to the professionals, like yourself. If I'm asking you about a certain neighborhood, I want to talk to you. I don't want to talk to someone who doesn't even know about it. Maybe they're in Queens and I'm asking you about Jericho. It's I wouldn't ask somebody in Queens about another town on the island. So
Right.
I would reach out to the professional in the area and obviously, find out what is necessary to get started or maybe get further along in the process.
Right. Every area is different. When I asked another loan officer this question, what is your least favorite thing? He said that his least favorite thing is someone saying, "My friend said this." So, for example, oh well, my friend said that I would qualify for this, or my friend said I would qualify for a lower interest rate. Do you deal with that a lot too?
All the time. So I had someone just recently call me and they said, "Oh, my friend just said that I could get a 5.5% rate when the
Right.
Fed announced the rate cuts."
Right.
And the funny thing about that is if you look at the 10-year treasury, which is what the mortgage rates are based off of, I'll just pull it up right now just for the sake of the conversation. So
Mhm.
the 10-year treasury, when they announced the rate cuts, were at 3.926. And present day, as of Friday, because today's a holiday and the market won't move, it's at 4.1 as of Friday evening, 4 o'clock when the market
Wow.
closed. So since they announced the rate cuts, it's actually gone the opposite way.
Mm.
So funny enough, um, it's not exactly accurate what your friend's telling you. A lot of those other companies, those will not be named. I obviously did not speak on that, but they're calling people about 5.5. They're advertising certain numbers, and it's not exactly, not exactly real, I would say. But yeah, we get a lot of that. Oh, my uncle said I could get
Right.
this, if I could do
Right.
this.
Right.
Just so everyone understands while we're on the call, no two credit profiles are the same. No two
Right.
down payment scenarios are the same. There's a lot of different factors. Every loan or every buyer is case by case scenario. So
Yes.
no two scenarios are ever going to be the same. There's a lot of different factors, down payment, DTIs, credit scores, location,
Salary.
all those things. So there's a lot that goes into it. It's not as black and white as people think.
Right. Yeah. I would imagine that being a loan officer is somewhat of a problem solver because, it kind of reminds me of chess because in chess, every single situation is different. And it's the same thing with loan officer. Every situation is different. Every person is different. Speaking of interest rates, we know the rates are going down right now. What do you think is going to happen? Do you think the home prices are going to rise and seesaw?
My personal opinion, I mean, Long Island is its own type of area, so I would imagine if we're talking just Long Island based,
Excuse me.
Queens, things of like our immediate area, I would imagine the prices are going to go up because the demand is going to, we're going to add back however many people when the rates slide down a little bit, right?
Right.
Maybe the person who is just outside of qualifying now qualifies and they can get $600,000 loan or whatever the number may be. But now that same house you're paying $40,000 over for at a maybe a 1% difference, that payment might be the same as if you were to buy it 6 months ago. So there's two different ways to look at it. I had clients that closed last year October when rates were almost in the eights,
Wow.
and now if they were to list their house, it would list for almost 50 to $70,000 over, and at the new rates where they're at today, it's about the same payment. So it's all relative to the person and what they're willing to take on as risk or whatever they decide to deem what they would, essentially pay for having their own space. It really comes down to that. I talk budget with clients every day. What's your number? What won't you go over? Listen, if we get an accepted offer and it comes out to be $150 higher, are you gonna back out? You know, how many times a month do you go out to dinner?
Right.
Cut back on that. There's your money right there. So
Right.
again, it's all relative to the person. But but yeah,
you're somewhat of a financial advisor, it sounds like. So you mentioned refinancing. Explain to us the refinancing process. What is it like? How do you apply? What are the pros and cons? Explain to us refinancing.
So refinancing, it really just depends on your current situation, right? So if you had a client that closed, and let's just say they had a 7.25%, I would ideally say to them to, wait till it goes into at least the six range, low six. Unless, $400 a month in savings is worth it for them.
Right.
There is a cost to refinance.
Yep.
It's typically anywhere from, I would say 2 to 4% just on, I like to over exaggerate the numbers, and when it comes in lower, obviously it's better for everybody. But if you're not going to recoup the amount it costs you to refinance in hopefully 12 to 18 months, I personally don't think it's worth doing.
Mm,
Again, if it's a scenario where the $400 to $600 a month for them is humongous savings, then absolutely, listen, we'll take care of it. We'll do it for you, no problem. The process to refinance, make sure you're still current on all your credit cards, mortgage payments, everything like that. No delinquencies. It's just 2 months bank statements if we need reserves, if you're going to pay the closing costs out of pocket. Um, you know, income documents just to make sure you still qualify at that new rate, and driver's license, social, which we would usually have from the purchase still from the initial loan. A cash out refinance, just to kind of pivot, if you were looking to take equity out of your home, you're able to do that as well, up to 75% of the home value.
mm,
So, if you bought your house, a few years ago and put down 20%, maybe it's worth 10% more. You could pull out some equity, consolidate some debt, and, start basically do a clean slate. If you were to do a cash out refinance, listen, I'll take a 7% rate over a 27.99 credit card rate any day.
right.
I'll pay that difference any day. It just makes sense.
Interesting. Yeah, because I feel like a lot of people don't know about refinancing, and it's a pretty complicated process. So it's not always worth it. That's a very important piece of information you gave. It's even if the rate goes down, it's not always worth it unless you save a ton of money, or at least save some money. It's not always worth it. That's a very important piece.
I would say, like I said, it's case by case by the client. So again,
Right.
if you're saving $400 a month over 30 years, I mean, it's still $150,000, roughly 144,000. I mean, that's
Right.
that's a lot of money for
Right.
someone. But like I said, I mean, to recoup, let's just say the house is 500,000, 3% it's 15 grand. It's going to take you 3 years to get that money back in savings. In my
Right.
eyes, that's how I look at it for the client. If you save $700, a month, I mean, hey, look, 12 to 18 months is in that range. You're break even. You're gold after that.
Yep.
So, $700 a month at the end of the year is a family vacation or a couple family vacations for somebody, depending on, family size, kids, whatever the case is, that covers bills for somebody. So,
Yeah, it's one of those situations where you actually have to sit down and do the math. Nick, tell us about one unforgettable experience you've had in your career.
that's a good one. Um, I would definitely say it was one of my first deals. It was a rent to buy scenario with a client in and it fell just before the holidays.
Hmm.
So we were working with this client for almost a year, trying to get him qualified, paying down some credit cards, getting his debt to income ratios to work, and you know, finding, helping him save money along the way and getting him to the closing table. And it came down to a scenario where I want to say it was 2 weeks out from Christmas, about 3 years ago, and it came down to us making a decision of crediting the difference of what he needed to close for his family, and or working with the real estate agent. Maybe they would split the difference with us and credit that as well. And sadly, the real estate agent wasn't willing to budge and credit anything back to the client, which was a whole different conversation, but that's okay. You know, um, so we made the decision as the team to credit, the difference of what was needed in closing from the lender side and get a family into a house, before the holidays. I couldn't,
Nice.
in my eyes, I couldn't tell a family with two young kids, that you're not going to have a house for Christmas. So we
Uh,
we took that on ourselves to, make happen, and having having morals in the industry definitely matters for sure. Taking care of certain things that just have to be taken care of. I wouldn't be able to sleep at night if I was telling the two kids, "Hey, look, you're not going to be in a house for Christmas that they've been living in because there was a rent to buy scenario."
Hmm.
So, how do you go do that? So we took care of that. We got it done right before the holidays. They were in the house for the holidays and everything worked out. So that was one of the most unforgettable transactions that I would say I had. I know you said experiences, but that's always top of mind for me because it was such a significant difference for that family.
Yeah, I mean, you're changing lives out here. That's one experience you'll never forget, and they'll never forget. Back to what you were saying before about morals. I heard that's the loan officer job can get somewhat greedy. Like, is it true that there are some loan officers that can be very greedy and sort of capitalistic? And is that a true statement? Would you agree with that?
Um, I wouldn't just say, I mean, listen, it's not just loan officers. I mean, there's all different walks of life, different professions that, listen, any scenarios do sometimes kind of spin a certain way.
Right,
It just really comes down to, the job is the best interest of the client at the end of the day. So you got to do what makes sense for them. Obviously, you know, we don't work for free at the end of the day, but
of
at the same
course.
time, I feel like there's a certain point where it's too much. But that's where I kind of stand on certain things. I'd rather just take care of the person, have them send their friends, family, their uncle, their cousins, and everybody my way, and then obviously take care of everybody accordingly. Um, but but yeah, of course. I mean, every profession has, certain people that take advantage but that's anything. That's any job, you know.
Yeah, that's true. That it is any job. Speaking of other loan officers, do you view other loan officers as competition?
Personally, no. Personally, no. I mean, at the end of the day, we're all friends. We all know each other. Um, if I see somebody in public, I'll shake hands. I do work out with a couple people here and there from different, areas, different banks and things like that. Like I said, we're all friends. Maybe there are certain things that I can get done that they can't get done at their place at a broker shop, maybe, and they'll send me a deal. I'll, hopefully wrap it up for them and then everyone's happy. As long as it's, you got to keep good rapport with everybody at the end of the day. That's really what matters in the industry. It's so small where if you speak poorly on somebody, they're gonna find out. It's not worth it. We all, like I said, we all know each other. We all go to the same networking events. We all,
Right.
we all know you. I mean, you've had some great guests on here already. I've seen. I know Christian Velasquez. We work in the same office. Chelsea Bressingham, fantastic. All great people that I know through the industry. So I think we're all friends at the end of I would like to think that we're all friends at the end of the day, personally.
I wasn't aware that you all knew each other. So I don't know if you know the answer to this question. Do you know approximately how many loan officers there are on Long Island, approximately?
I don't have that answer off the top of my head.
Okay, I'm willing to bet it's a lot, but I didn't know that, that you all knew each other. Or maybe I'm sure there are some that you don't know, but
Of
I'm sure
course.
that you know most of the seniors. Nick, do you deal with commercial real estate as well?
I personally don't. That is a whole nother realm in itself. You're talking triple net leases, T12s, rent rolls. I do have friends that dabble in commercial real estate. But I personally, that's a whole nother beast from residential real estate.
Yeah, I heard it's very political and it can get pretty nasty. Um, Nick, where do you get your leads from?
So me personally, credit, I give a lot of credit to my branch manager, Dan DiBiase. He tells us every week, and from the beginning, from even when everyone was doing a lot of refinances and things like that during COVID times, hey, everyone's doing refinances. What I want you guys to go do is every week pick, a bunch of different open houses in the area, reach out to the agents, offer your services, bring some marketing materials and make friends every week. Try to get a couple different connections every week. I've been doing that for as long as I've been in the industry. And it's paid off. I've met some great friends over the years that, agents that became friends, some scenarios where they have an accepted offer on the house and it falls through with the financing. And hey, John, how's it going? What's going on with this house? Oh, the buyer actually didn't qualify at that bank. All right, hey, well, let me take a look at it. Maybe we can get it done. So reaching out to those agents, being top of mind, hey, how's everything going? Do you guys have anything that you want me to take a second look at? It doesn't cost you anything. Let me spend the time on it, see if it works, and then I'll kind of just try to spin it back to them and get the deal done. And other than that, just anyone that you do have connections with that you've done business with, just reach out and just say, hey, I have a couple buyers coming up from an open house, and I always keep the leads from an open house with that respective agent. So if you and I did an open house in whatever town,
Uh-huh.
I personally make a spreadsheet. I have the sign in, their name, email, phone number, and then I'll basically, if we do a Saturday, I'll follow up with them on Sunday. If we do a Sunday, I'll follow up with them on Monday. Hey,
Mhm.
just want to get some feedback about the house, things you like, things you didn't like. Is it something you see yourself putting an offer on? And then, hey, Christian, I have this whole spreadsheet of people. Here you go. If you want to reach out to them yourself and see if there's anything hot there, so we can kind of just act on it right away. I do keep spreadsheets for all my different people. It does get a little tedious, but it's worth it at the end of the day to have.
Yeah, you use Google Excel?
So I actually use a system called Monday.com.
Is that a CRM?
It's a CRM, yeah. So there's a bunch of buttons. I have about 40 different things built out where if I, click on something, it'll send you a follow-up. It'll send you, hey, I'm missing these documents from you. Hey, congratulations, you're pre-approved, updated document list.
Daily
Hey,
tasks?
yeah, it's a bunch of different tasks basically, and it just helps me map out where they're at in the process. Hey, we have Sony May, we have different programs that you're eligible for potentially. I just need to see your documents. Keeping everybody updated for the most part. I do send out automatic emails every 36 to 48 hours, just to stay top of mind, like I mentioned. I do go through my approved buyers first, and then I have a separate one of pending documents. That's,
Uh,
a long list of people, and then I go through the cold leads after.
and just wondering, is that CRM free?
It is not. So I pay for 3 seats, and I actually um, put the agents that I deal with on it so that because most of the leads are coming from, open houses that I'm doing with them. So I try to keep them interactive with it as well. So when I send out the email, they're also getting a notification showing that I'm touching on the clients and touching base with them and seeing where they're at. It's just keeps everybody up to speed. I don't have to go, you know, call them, hey, I spoke to John, I spoke to Candace, they say hi. They're not really looking right now. I'll talk to you later. All right, bye. And hang up. They see it on their phone. It's direct to their email. They're basically BCC'd on every email, which is nice. So they see that it's being worked on. It's not like they're sitting around and not being worked. So I
Right.
personally love the CRM. I haven't really used one prior. It was all Excel spreadsheets, and this just condenses everything and puts it in a lot better perspective.
Interesting, because the vast majority of people do use a free CRM. I know there's a bunch, but I guess some are worth it. I'm assuming that the ones that you pay for have a lot of features that the free ones don't have. Nick, in the beginning, did you have a trainer?
My branch manager. Yeah. My branch manager and my senior LO. They definitely taught me more or less everything I know about the industry. Like I said, I'll give props to them endlessly. Daniel DiBiase and Nick Lally. Both of them are, solid guys. They help me out on deals where, maybe I don't know the guideline at the time, and they kind of coach me through it and say, hey, look, you got to look at it this way from this perspective. This works here, this one doesn't work on that file. And, they've definitely taught me a lot, and I'm forever grateful about it, for sure.
Yes, you and I definitely have jobs where we need a trainer in the beginning. We can't just, be on our own. We need some sort of mentor in the beginning. Nick, approximately how much per month do you spend into your business?
So all encompassing, I mean, on the CRM alone, I would say $150.
Wow,
Doing
150 a month on the CRM?
yeah, well, because like I mentioned, I have seats for agents that I do work with. So I pay for 5 seats. One is myself, and then the CRM. After we finish up, I can show you it a little bit, and you can kind of take a look at it for yourself. See
Right.
what it's about. But I do have digital sign in for open houses where you do a QR code sign in. It brings you to a name, email, phone number prompt. It records all the information. It sends them an automatic email with the floor plans if provided by the agent. I send a text out right after, so the number and email are verified. So in my eyes, it's worth the dollar, and it tracks everything through a separate spreadsheet for that open house. But other than that, um, you know, I would say, you know, lunch and coffee with agents that I've worked with and things like that. I don't know. I can't really put a number on it. If I had to look back, my accountant could probably tell me pretty quickly. But
What about marketing? You put money into marketing?
Uh, I don't. So that's the thing. We don't really market too much between you and me. I do have a videographer that I love to use. His name's Alexander Ford. Phenomenal guy. We've done some video together, and I do kind of help circulate those through. It's, very basic videos, touching on the guidelines of certain programs and highlighting the ideals of, how to use them and how to get it done. Mortgage process, things of that nature. Um, but you know marketing, we do, but it's really just for the open houses. I market myself very, very loosely. I do run a Long Island Real Estate Facebook group. I think that's actually where I saw your video uh, with
Oh,
Chelsea. And great job. Like your videos have been great all the way
thank
through. I
you,
think
man. I
you do a great
appreciate
job
that.
with this so far. You've gotten good feedback.
Yes, people seem to like him. People seem to have fun, and it's also a learning experience for me. I've never studied to be a loan officer, so
Mhm.
there's a lot that I don't know as well. Nick, what is it like working with an investor versus a home buyer?
That's a good question. So, home buyer, first time home buyer, it's a little bit more of an emotional process just because they're worried about the 30-year number with principal, interest, taxes, and insurance, right? So, it's a little bit more of an emotional purchase with a first time home buyer. They think that they're stuck there for 30 years between you and me. Realistically, you know, you could buy the house and sell it in 6 months if you don't like the house. It's one of those things where you're really not stuck. Obviously everything comes at a cost. Maybe, listen, maybe you buy a house, it appraises higher, great. You're in a great spot. And then, maybe you have twins in a year and a half, and now your family size doubled. So it's a little bit more of an emotional spot. Growing up, me personally, my parents they bought the house and they did room by room and fixed certain things up. So it's a little bit more involved on the personal side versus investor. Investors, they're looking for a certain number. The number makes sense for them.
Yep,
This is my after renovation cost.
yep,
Hey, my number's my number. This is what I'm looking at. This looks great. Let's do it. They're usually ready to go. As long as they can meet their numbers and make sure everything's paid and they're walking away with hopefully a figure that makes sense to them, then they're ready to go. It's a lot less involved emotionally. Um, I do have a team of investors that I work with throughout the year. They probably do, 10 to 20 flips a year all
wow.
over the island. Same scenario with them, hey, find me a house. Let's get it done. And what number are you guys looking for? Well, this is where I want to be. Okay, we'll see if we can do it. If not, then great. I do work with agents that do find us those homes. But as you see, I mean, as you can probably see, wholesalers are everywhere. Some of those homes that are off market are few and far between now because there's so many people looking for them. So, but investor, just to answer your question, investor to home buyer, first time home buyer is a little bit more difference. Emotional versus did the numbers work? I'm there. Let's do it. So,
Right. Investors are just all about numbers, 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 and home buyers actually care about the location and the school and this
school
and that. They,
district
they,
and
they care
yeah.
about, I would say that they care about more things, not just the number. So I know a lot of investors buy straight cash. You're not involved in that process at all. Loan officers don't, right? Is that
So
true?
when it comes to a cash purchase, we're not really involved at all,
Uh,
because there's no new loan to be transacted on.
right.
But what we do offer at our bank at Nationwide Mortgage Bankers, we do have creative financing options. So if you wanted to do 24 months bank statements, you could do a non it's considered non-QM. So it's a non-qualified mortgage. So
Okay.
it's you could do 20 to 25% down. You could do 24-month bank statement. You could do a profit and loss statement purchase. You know, you can do no doc. You can do. There's a bunch of different programs. I have a full list I could send you guys out, and you could take a look at it. But we do offer those. It's a little more loosely qualified, and in some cases, hard money. If people are going hard money versus these mortgages, I mean, you could save 3 to 5% on the rate alone doing these creative financing options versus 12 to 14% on hard money currently. So it's definitely if you have some capital to play with and not just looking for cash purchase, I mean, we could definitely work something out and, find a program that works for you where you're not, subject to 12.5% rates. It's crazy.
Yeah, 12 and a half is ridiculous. It's like usually not even worth it. Nick, how will the NAR lawsuit settlement affect loan officers?
In my personal opinion, it hasn't really affected us much other than just the agents that we're dealing with. Sometimes submitting the offers, they do want their compensation. The buyer's agents, they want the compensation coming out of the initial offer,
Right.
rather than direct from the client. So it doesn't really make a difference for us per se. Um, but dealing with the buyer's agents, obviously, it's a little bit more involved with them getting there and making sure that they're getting paid and I haven't personally seen it affect us directly yet in any way.
Right. That seems to be the consistent response. Nick, do you have any tips for new loan officers?
Get in any room that you can. Talk to everybody, be friends with everybody, try to keep your opinions to yourself sometimes, bite your tongue, and just be friends with everybody. You can't just go out and say, "Hey, my name Christian, pleasure to meet you. My name's Nick. Hey, do you have any deals for me?" It doesn't
Yep.
work like that.
Yep. Yep.
Build rapport,
Yep.
start strong, put your best foot forward, go talk to somebody in the room, talk to anybody, you never know. Maybe someone's looking to buy, maybe someone's looking to buy their second home in
Yep.
North Carolina, Florida. Hopefully, those two areas are doing okay right now. But you never know who you're going to come across. Go to the bigger pockets events, go to any kind of networking events where there's some sort of value for you there, and just get in the room and just be present. That's really it. Shake everybody's hand. You know, remember certain things about people. Hey,
Yep. Yep.
Christian, hey, you have that great podcast. Hey, I have someone maybe you could talk to. You
Yep.
know, and just kind of build relationships. This whole job is relationship based. If you have good rapport with everybody, you'll be doing okay, in my opinion.
One of my favorite quotes is your networking, your network is your net worth or something like that. That's one of my favorite quotes. Um, Nick, where can people find you?
So you can find me on Instagram. It's my last name is Carrino, Carrinoo. You can find me at 3 Huntington Quadrangle, Suite 403 North in Melville, New York, 11747. Um, or if you have any questions, you can find me in the Long Island Real Estate group as well. If you have any questions or anything like that, you guys can find me all over the place. I'm everywhere and nowhere at the same time.
I'll drop you all your information in the description below. Nick, it was great talking to you, man.
Pleasure.
Have a good one, man.
Thanks,
Take
man.
care. Bye.